What's going on YouTube? So we're back again with another video. Today I'm going to be showing you how to get funded using the EMC swing strategy. In other words, it's an ICI, which is an impulse and correction followed by a further impulse. Let's get straight into it. So what we're looking for, really and truly, there's other videos that I've posted. Now this one is an updated version, right, with a bit more detail into it. But simply all we're looking for is an impulse, and now an impulse has to be followed by one or more several candles in one color going towards one direction, right? In this case, as you can see, we've got one candle, two candle, three candle. Now you can see the colors, it's all blue. Blue marks an uptrend for my charts, and that would be considered as an impulse, followed by a correction, which has to be followed by two minimum candles as the correction, right? So as you can see, 1, 2 is the two minimum correction candles in the opposite direction. Now the correction has to be the same color. It won't be the same color as the impulse, but it will be the same color as whatever the correction is for your charts. In this case, my charts is black, so it will be two minimum black candles in the opposite direction, right? Now with that being said, what we're going to be using is a Fibonacci retracement tool as well, and I'll show you guys how we use it in order to mark our retracements and also get involved with the trade, and where our TP entries and stop loss is also going to be. So first impulse, correction, and then we want to get, technically what we're doing is once we got the correction, we actually want to get involved with all of these candles that you can see. So the 1, 2, 3, 4 blue candles to the upside, that's the movement we want to get involved in. So our entry time frame will be the 4-hour time frame, right after we've got the correction, and we want to basically get involved with the move that pushes up to create a further impulse. So remember in the beginning when I said ICI, so this will be the I, this will be the C, and this will be the I. So impulse, correction, impulse. We want to get involved with the next impulse. All we're waiting for is the impulse and correction, then we get involved with the next impulse, right? So it's like a wave strategy, and it is a mini swing strategy. Sometimes the strategy takes anywhere between 30 minutes to about possibly 5 days to play out. It just depends on the time of day you enter the trade in, as well as volume and so many other factors, right? So that's just one setup right there. Another setup would be another one here, for example. So you can see an impulse over here, a correction, right? And then we get involved with the next impulse pushing up to the upside, again using the Fibonacci retracement tool in order for us to get our entries, stop losses, and our TP as well. And there's some other factors inside it. So this is trading view. What I'm actually going to do is I'm going to switch over to FX replay so that I can show you using basically a backtesting tool, software tool, where it can just show you proper statistics across the whole board. So I'm going to switch over now basically. So we've now switched over to FX replay. As you can see, it's a backtesting software. You do get a 5-day free trial. I'm not an advocate for them or anything like that. It's just a very good backtesting software, better than TradingView. The actual software is based off of TradingView, so the charts are similar, they're all the same and everything. It's just a backtesting software tool where you can get, you know, indicative statistics about everything you're doing, as long as you obviously enter your trades, or if you want a journal and so forth. So what we're going to do is we're going to start off with a 100k account, right? We're going to do a pair Euro CHF. We're going to do it for an entire year. So we're going to start off with January the 1st 2022, and we're going to do it right the way through to January 1st 2023. In other words, 365 days or 366 days, whichever one it is. And then we are just going to start. So let's start this off. Let's do this one over here, right? So as you can see at the bottom, we've got our account balance, we've got our realized P&L, and we've got our unrealized P&L as well. So just pay attention to that across the whole board. Now what we're going to do is I use one indicator. Again, you don't have to use indicators to do this. I just use indicators because it's very easy. So if you do want to follow the strategy, just go ahead and follow it exactly how I do it, and just make notes. So with the fractals, I use a period of number 2, which is the lowest number. So in other words, what we're saying is every 2 candles, we are going to mark a high or a low. So that will either be a green candle or a red candle, right? Now, if you look closely, you can see we've got a green candle on a white candle and a green a green fractal on a white candle and a green fractal on a blue candle. So in other words, what it does, it actually covers the wicks rather than the actual candle itself, right? So let's pay attention to that. So really the fractals doesn't really care about the color of the candle. It cares about how far price has traveled previously, so it does include the wick. Now what we're going to be doing is waiting for, so the way to do this, you want to see that setup occur. So you want to see an impulse and a correction. If you don't see an impulse and a good correction, we do not bother marking the chart. So always look for that setup first. That's first and foremost. So what we're going to do is I'm going to play price and I'm going to wait for an impulse and a correction, right? That's what I want to see first, and then we'll move forward. Okay, so we have an impulse, now we have a correction, as you can see. So as you can see, we've got an impulse, 1 2 3 4 candles going up, 2 retracement candles coming down, right? Do we see a breaker structure? Yes, we do. We see a breaker structure here with the fractals, right? That's the first breaker structure. We can see another breaker structure over here with this candle over here. Now the last breaker structure is this one over here, right? So these are the zones that we need to pay attention to. Now the way I draw my zones, especially when it comes to the daily time frame, right, I draw it from the body to the wick, like that, right? Let me get rid of the arrow. There we go. So the reason why I do it from the body wick is because not only does price cover the wick, when it covers the body and the wick, it covers a certain area. Now if I was to drag this box towards the left hand side, as you can see, this area here was support, which it did break through to the downside. And what did it do? It created a resistance area, right, up until the point where it decided to consolidate inside that area and start creating more wicks towards the downside. Especially when it came to this area over here, it created another wick, which was a resistance area, came back down, broke below, acted as resistance again, and kept creating lower lows and lower lows up until the point where price now reversed, broke back above that area, and now we're hoping for it to act as a support area to push higher, right? So in other words, we're bullish on the daily time frame because we're looking for a bullish ICI setup, right? Not only do we have that area there, we also had this area that I marked up, but as you can see, this area also coincides with the first area that I drew up, so therefore I no longer actually need to keep that zone there. But as you can see, we got this one down here, which is the first one that I did draw. So these are the two areas that I'm concerned about, right? Price might decide to break below the first one. If it does, then technically I would use the second zone to go off of and expect price to basically, so I'm expecting price to do this with the first one, right? Price might not do that, might come down to this one and then decide to take off from there, right? So we've got two options. So we'll wait and see what price does. And let's play price. Okay, so before we play price, now in this case, as you can see, we waited for that setup first, then we started marking our zones. Reason why we want to do that is because that's how the setup is. We want to wait for that setup and then also draw zones and confirm whether price has broken a level of structure before we decide to take it higher, right? Now as you can see, we've got our impulse and correction. Once we have our impulse and correction, and we only mark our zones after we see a second retracement candle. If we see a first retracement candle, we don't bother marking it up, because after the first retracement candle, it might get invalidated by price creating another bullish candle. Therefore, that does not count as a retracement candle. So once we see two retracement candles, then we start marking it up. In this case, since we've got our second retracement candle, what we do is we draw our fib from the very bottom of the impulse to the top of the impulse or the beginning of the retracement. It's the same thing. Now we should expect price to touch the 38.2 level fib, as well as the area in which price has broken, right? Now price, as I said, can break the first box, which isn't a problem, but then technically it would still count as a retracement candle because it hasn't actually broken past the very first level of structure that it has broken, right? So price doesn't have to stop here. However, I'm expecting for price to stop here. Now the fact that it's touched the 38.2, which is one of our checklists, and I'll go through the checklist in a moment. The fact that it's touched 38.2 usually marks a good retracement, right? The fact that it's broken above a level of structure and has retested that structure is also a good thing. So those two that I just mentioned is part of the checklist, right? Now, since we've got that down now, what we do is before we do anything else, we go to a higher time frame to determine whether we continue marking this setup. Right, so we jump down to we jump up to the weekly time frame, and the same thing. You see, when I showed you how to mark the structures on the daily time frame, right? Body to wick, we do the same thing. So where current price is at, we look for any areas within that place and see if there's any areas that we can mark up to be a weekly resistance or support zone. In this case, where current price is at is this area here, and this is the closest wick that we can see on a weekly time frame, right? So instead of doing body to wick on the weekly and the monthly time frame, because we have to do this on the weekly and monthly, instead of doing the wick and the body on the weekly time frame, we just include the wick on the weekly and monthly time frame. Reason behind that is because when we do the body and the wick on the weekly time frame, usually it covers a bigger area because obviously it's a bigger time frame, right? So in order to prevent that from happening, so that your charts are not cluttered, you just do the wick alone for the weekly and monthly time frame. When it comes to the daily time frame and any time frame below that, all you need to do is body and wick, right? So just keep that in mind. So now that we've got that on the weekly time frame, I can jump to the monthly, and I can see we have this monthly support area over here, which actually lines up with our TP area, which is all the way up there, which is our -27, right? Now we are heading into, let me just bring this forward so you can see it. Now we are heading into basically this monthly resistance area, which is fine. That's where our TP is. So in hindsight, what you can actually do is whenever you have a resistance or support area, you can buy or sell into those areas, but when you're in those areas, do not try and counter trend the trade, basically. So in other words, if I'm buying into a resistance area, if I'm in a resistance area, do not try to continue buying inside that resistance area. It's a resistance area for a reason. When you're in a resistance area, the probability of price selling from the area is highly likely, unless there is some sort of fundamental to say that price is going to break that resistance area, right? So you're better off counting your probability behind every setup for you to get the best winners, right? So in this case, I can actually buy into that resistance area because my entry will be nowhere near there, right? But then when I'm in that resistance area, I need to be cautious, right? Because at any given time, price could always reverse. But again, since I'm not in that area, I'm not looking for any buys, but I'm outside that area, so therefore I can look for buys into that area. Does that make sense? So now that we've got that down packed on the daily, monthly and weekly time frame, right? As you can see, this first blue zone is the daily time frame, so this is the daily level of structure, right? And then we've also got this red zone here, which is the weekly support turn to resistance area, which is now acting as a support. As you can see on the daily time frame, we have broken above that area, right? We've now retested the same area, which lines up with that daily time frame area that I told you about. So in other words, we're both bullish on a monthly, on the daily and the weekly time frame, right? But now we're heading into a monthly resistance area. So in other words, the fact that the first two time frames lines up gives us an indication that we can actually still take this trade higher, right? So now we've got all of that down packed. Really and truly, what you really want to happen is the daily, weekly, and the monthly time frame to actually line up together, right? So daily bullish, weekly bullish, monthly bullish. There's going to be times where the monthly time frame doesn't align with the daily and the weekly. So therefore, as long as the daily and the weekly time frame line up and the monthly doesn't line up, you can actually still get away with entering the trade and still go in the direction in which the daily and the weekly time frame is. Reason behind that is because the distance between the time frame that you do enter the trade on, which is the 4-hour time frame, and the distance between the setup time frame, which is the daily time frame, in comparison to the monthly time frame, the distance is quite large. How many 4-hour candles take to form a whole monthly candle? There's going to be a lot of those. How many daily candles form to create a monthly candle? There's going to be about between 28 to 31, right, give or take. That's a lot of candles. So you can actually get away with it, especially with the monthly time frame being the highest point of time frame, right? So as long as you got that down packed, you are good. In this case, since we've checked our higher time frame and we can confirm that yes, we're going bullish, what we now do is we now adjust our fib. Since we've got the impulse and we've got the correction, we want to get involved with the next impulse. We move our fib to the bottom of the correction, wherever that is, right? and then we jump down to the 4-hour time frame. Now, as you can see, the negative 27 is our TP. Initially it was all the way up here, but now it's actually at around the beginning of that monthly zone, right? So price could get there before completely reversing, but when the TP was to the top part of that monthly resistance zone, then it would have been a bit tricky, because now price would still have to travel a bit further, right, before finally hitting our TP, if it did want to do that. Now let me just get rid of these areas. In fact, I can keep that one. Let me get rid of these areas down. Let me get rid of the red zone, right, so you guys can see properly. So remember, this is the first and highest zone. So now simply what we're doing here, we are actually just going to wait for a 4-hour candle to break above the 61.8, and once it does that, we're going to set a pending limit order at the 61.8, right, and then we're going to target the negative 27, and our stop loss will be a few pips below the 88, so that we can get a 1-to-3 risk to reward ratio, right? So let's just play that candle and see what happens. Did that break above the 61? Yes, it did, but barely. Now this is where it gets interesting. From the very point of where you put the bottom of the fib, right, you want to count the candles, or you don't want to count, but you want to look at the candles to the right hand side and see, is there different colors from this very point? Are there different colors that are formed as price goes to break the 61.8? A break is considered a close, by the way, in this case. So is there different colors that goes towards the 61.8, close above the 61.8? Are there different colors in this very moment? No, there isn't. Did we have a slight break of the 61.8? Yes, we did. However, that break is still considered a break, right? Because when you set your alerts, you would get an alert that a 4-hour candle closed above the 61.8 level fib. So because there is no structure, in other words, different colored candles on a 4-hour time frame that decided to go up and break this 61.8, this is where you would now adjust your entry based off of that information. So your stop loss will now go to the very bottom of this fib, and your entry will be a few pips below the 61.8, so that you can still get a 1-to-3 and your TP stays the same. The reason why we're doing this is so that your stop loss is actually covered by the last low. If we did have several different colors on the way up from this very moment, right, from the very bottom of the fib, if we had different colors going up and down as price went to break the 61.8, then that is when you would have your entry at the 61.8, or maybe a few pips above, just so that you're covered by spreads. You would have your stop loss here, and then your TP here, so that you can get your 1-to-3, right? So there we go, right? That's what you would do. So in other words, this would be considered a normal entry as long as price creates several different colored candles as it goes to break the 61.8. But then this would be here, this first one here would be your next entry model if there isn't several colors going up and down as it goes to break that 61.8, right? So in other words, you want to basically get in line with structure. So this will be your entry model for this setup, right? So what we're going to do is we're going to delete that second entry model. So we're going to go here, we're going to place our order, we're going to do a 1%, we're going to do an automatic break-even level. Now I will explain the break-even levels in a moment, but what we're going to do is we're going to buy this setup, right? So you see how we got tagged in now? Now if you was afraid of this candle being a break, this is definitely a break. Although you can see major wicks on both sides, this is still definitely a break. So we're in the trade now. See now, if you had entered at the 61.8 as normal with the other entry model that I told you about, right? And your stop loss was here, you would have been stopped out by now with this candle here that was just formed. You would have been stopped out with this candle here, which is why you put your entries exactly as I told you, depending on how structure is formed as price goes to break that 61.8 level. So in other words, right now we still have a few pips below, covered by this low, before price decides to stop us out. So we're going to play price and see what price does. Perfect. Now we got stopped out on that trade, which is fine, right? When something like that happens, what do? We go back and adjust, right? We go back to the setup time frame. Now on the setup time frame, which is the daily time frame, What has price created? Price has created a third retracement candle. So in other words, we expected the second retracement candle to be the end of the correction candle, but it wasn't. In other words, it was a fake out, right? What it's doing now is creating a third retracement candle. So what do? We simply just adjust our fib, right? Remember, our fib was here the first time. We adjust our fib is now here. So simply we keep adjusting up until the point where price on the daily time frame breaks our support or resistance area, depending if you're buying or selling. As you can see, we've just got a third retracement candle, hasn't actually broken out the first one, right? And again, even if it does break out the first one, I still have this one in order for price to come back to. But ideally, I don't want it to come back to this one. I want it to come back to this one, because this is actually the last structural zone that it did break past. So I'm hoping that it holds in this area, right? Now with this setup, as we keep moving our fib lower, as you can see, our TP is also going higher and higher into that monthly resistance area, which is something I don't like. So we're still below midpoint, or nowhere near enough midpoint of that resistance area, right? So we're still good for now. As I said, you can buy and sell into those areas, just be careful. Now in this case, if you guys can see, hold on, let me put this back towards the back, center back, so you can see the candles, right? Now remember what I said about where several different colored candles on the way up, as if it goes to break the 61.8. This is what I mean. So from the very point of the low point of the fib, we've got a white candle, we've got a blue candle, white candle. So you can see now we're starting to get several different colored candles as it goes to break the 61.8. That is pure structure, right? And as you can see, price is now creating lower lows again. No problem, we adjust our fib. It hasn't broken out of that area on the daily time frame, right? We adjust our fib again. Now this is the very low point of this area. What color candle is that? That's another blue candle. That's a white candle. So now it's creating structure, right? We adjust our fib here. It's creating lower lows. I'm going to adjust my fib again, go to the daily time frame. You see how it's still creating that correction candle? No problem. Technically this daily candle hasn't closed yet, which is fine. Now it's broken to this area, no problem, right? More correction candles. So in other words, since it's broken this first one, I'm going to get rid of that one, because now it seems like it wants to hold in this area, right? And this area is still valid. There we go. So now it looks like it's heading back up. We'll see. Now go back to the daily time frame. What do we see? See how our TP is now risen above halfway of this area. Still valid, but it gets tricky. So we'll see what happens when price decides to go towards that area, because we might get invalidated before we even decide to get an entry. Price is creating lower lows again. Now has that candle finally finished? What time is it? 6 a.m. So I'll wait for the next. Yep, so daily candle closed here on a 4-hour time frame. So now we see how we're below this area, invalidated. So now the setup is invalidated. That's what causes a setup to be invalidated. So I'm glad that happened, because now you can see what causes a setup to be invalidated, right? Now this you'd think is a impulse and correction, right? However, when you do get an impulse and correction, which is why we always look for the setups to occur first, we wait for the setups to occur, then we start analyzing. When we got that impulse and correction, if this is the last low from this very point, right? Yes, we see a fractal here, but technically this fractal is caused by this correction. But this is our impulse and this is our correction, this is our setup. So from an area in which we had that setup formed, did we break any lows? No, we did not. As you can see, we just respected this area, which was a support area, and it still is a support area, right? So therefore this does not consider itself to be an impulse and correction or an EMC setup. So therefore we no longer look at that, right? And we don't bother looking at a reversal in that area there. So let's see what happens. Now we could have, if this candle was white, we possibly could have decided to get in for a reversal, because that would have actually gone straight to TP if this candle was a white candle. However, as you know, we only take setups that are confirmed. So in this case, what we're going to do is wait for another impulse and correction. I actually want to hit at least one TP, so therefore I can, okay, here we go. So we do have another impulse and correction. Impulse over here. Oh, sorry, that's our breaker structure level. So impulse will start from this blue candle, impulse, correction, right? Is there any other areas that it has broken? Nope. This is now a double top over here, but I'm not concerned about the double top on the daily time frame, because that double top there is what even allowed us to get that retracement in the first place, right? I would be concerned about any higher time frame level of structure, right? Now, nearest level of structure that we'll be heading into is actually this weekly resistance, which is kind of far from our area. We do have another monthly area down here. I'll drag this across, which is also kind of far, so I'm not concerned about that, right? So nothing is actually obstructing us from hitting our TP, in other words, right? And then you can also go back to the weekly again. Price is currently here. We see this area over here. So is there anything that is telling us is bearish or bullish? If these are resistance areas and it's nothing stopping us from hitting our TP, but then we have a resistance area here which we've broken on the weekly time frame, right? Followed by the daily time frame, and then this area here is actually both. It's basically double confirmation, basically, right? So we're expecting price to come back to this area. Now, given price doesn't have to do what we want, as you can see, it hasn't touched the 38.2 and it hasn't actually come back to this area. However, we're still bullish. So therefore, what we do is, since we got the second retracement candle, we still take it as normal, right? Unless price decides to fall back. So we jump down to the 4-hour time frame, and actually what we should have done, because price started to play out without us, let's pull this back. There. So now this candle, this white candle here on a 4-hour time frame, is actually the end of the second daily retracement candle, right? So yes, you can turn around and say, yes, price has broken the 61.8. However, this does not consider to be a break of the 61.8, because technically this push up and the break is actually part of the second retracement candle. So therefore, we only consider a break for anything after the second retracement candle. If it does it before, we do not consider it as a break. So if this is where the break was, and this was that you're basically, you put your pending limit order and you basically tagged into the trade, you shouldn't have been tagged into the trade yet. So right now, anything after this white candle on a 4-hour time frame is considered a break. So what we're waiting for now is for a blue candle to push up to break there, right? And then retest for us to go long, right? But what we still consider is, from this very point here, is there structure? Is there several different color candles, right, going up to break that 61.8? In the initial term, no. But remember, that wasn't part of the break of the 61, because this is still part of the second retracement candle. So in other words, as long as we get a blue candle pushing up and breaking it, then yes, we would have structure, right? There we go. So now that we have structure, we can actually enter as normal, right? Because then our stop loss will be below the 88, and then we've actually got a low over here, which technically lines up with this area over here. As you can see with our fractals, this will be a low, basically, right? So what we're going to do is take that to negative 27, stop loss a few pips below. Now if it does stop us out, it's not a problem, because technically we were way, well, I don't want to say way, but we were above those areas that we did expect price to fall back to. But again, we have to adapt to what the market decides to give us, right? So let's see what happens. Okay, now at this point, you see how we now have a 4-hour candle above the 38.2. At this very moment, this is where you want to move your stop loss to break even, right? So you just drag your stop loss to break even over here, and feel free to take partials. Maybe take 50%, 40%, 60%, 80%. Take however much you want off the table. But at this point, when a 4-hour candle closes above the 38.2, you move your stop loss to break even and you take partials. That at least secures something off the table, right? So that you can actually start making slow gains, even if price decides to reverse away from you, right? So in this case, because I have automatic break-even levels, I'm just going to wait for the next candle to form. What I will do is, there we go. So I'll wait for the next candle to form. I'll take 50% off the table, And now as you can see, we wasn't drawdown of $1,000 because we lost one trade, but in this case we actually secured our 50% of the table, right? Our stop loss is at break even. Now I'm only down $149, right? Now in this case, what we're going to do is let the trade run, right? Now as you can see, it did come back and hit us in our stop loss, but we didn't lose anything. We actually just secured profit, right? Now that went straight further down, which isn't a problem. Now since that setup is now invalidated, what we're going to do is we'll just move on to the next setup, right? So we wait for another impulse and correction. So that was a break-even trade. So we lost one. We had one break-even trade. I'm hoping to find another. Setup in order for for buys. But we'll see what happens. If I find another setup that actually hits TP, then it means I can fast track this and then skip to the end basically and show you guys the stats. At least you guys would have seen, you know, we have losses, we have break evens, and we have full TPs being hit as well. Now in this case, as you can see, we've got an impulse and we've got a correction, right? No problem. Funny enough, we did have an impulse and correction here, but again, this did not mark a fractal, so therefore I did not take it, nor did it break any highs, right? Again, everyone draws their structure differently, so some could have said yes, it did break it, some would have said no, but again, I use my fractals because it's very easy and it's actually it's consistent. Let me just put it like that, right? So we got an impulse, we got a correction, 2 minimum retracement candles. We jumped to the higher time frame with current price. As you can see, we've got this over here, right? Now that's our weekly time frame. Our other resistance areas is literally this one here. I'm not concerned about these two because this is internal in comparison to this. We're actually heading towards the outside, right? Jump to the higher time frame on the monthly time frame says we're bullish. If you can see this massive wick to the downside, and we're also towards this area over here, so we'll see what happens. It depends on where our TP will be. Okay, now it's a bit tricky because yes, we did break above the red area, but we also broke below the red area. Now if we was to get involved in this trade, we would have had to wait for price to basically hold within the red zone rather than break below the red zone, because to me what that's saying now is although it broke above the weekly resistance area, it's actually back down as a support area. Well, it should have acted as a support area, but now we're back into resistance areas, right? Although the daily is holding, but remember the higher time frame is king, so whatever the weekly says, the daily will eventually also say at the same time, right? So it's up to you. You have a 50-50 chance with this one. Although we did still break the higher time frame, the weekly time frame above, yes, it has broke below, but it could have broken below to actually hold within the daily to push up higher, right? So again, you got a 50-50 chance with this one. Now what I'm going to do is we're going to press play and see if we get an entry signal. If we get an entry signal, we'll take it. And this is exactly why I wouldn't take anything, right? Because now, as you can see, we have a blue candle here which marks the end of the retracement, but we've got another white candle here, right? Now technically, since it hasn't actually broken this zone, you could just adjust your fib, right? Because all of this is still price action, and wait for price to actually break the 61.8 to go higher. But again, if it breaks below the blue zone on the daily time frame, we're not taking it. So we'll see what happens. See how it's creating lower lows again? Perfect, right? Jump to the daily time frame. Hasn't broken it, but is rejecting that area, so we'll see. Okay, there we go. So it actually broke it, right? Now from this very point over here, what did it do? You see how there's different colors that are being formed as it breaks the 61.8, so there is structure over there, right? So technically you didn't actually need to put your entry anywhere, you know, below the 61.8. You could have put it here. It would have been a drill down a little bit, which isn't a problem, right? But your stop loss would have been covered by this area over here basically. So if you had taken this setup, basically what would have happened is, if I go back to this area here, you see now where your TP is. Our TP is way above this area here, which is the area that I said I didn't like in the first place. So therefore I wouldn't have taken it just because of how the setup was formed, right? But let's see what happens if we did take it. It would have resulted in a break-even trade basically, right? So entry, you would have got tagged into the trade, you would have gone this way, break even, it would have come back and stopped you out basically, right? So in other words, you still wouldn't have lost anything, but you really want to be hitting those you know, TPs basically. So for demonstration purposes, what I'll do is I'll revert this back and I will collect that as a statistic so you can see it, right? Entry, stop loss here, and I'll take 50% off the table just for stats. There we go. So we've got 50% off the table. See, now we're up 600 because we decided to take 50% off the table. So we only lost one full trade and we're back up in positive, right? In this case, and we got 2 break-even trades. So now we're looking for a new setup that decides to give us a full TP. So we're going to wait for that impulse and correction. So let's see. Now this is going to be one of those tricky ones, right? Because we have structure right here. This is the only time in which I would use an opposite fractal in order to catch a trade. Reason being is because right now what we're seeing is an inverted head and shoulders. So we've got a leg or left shoulder, inverted head, right? Got a right shoulder right now, and we're looking to get involved with the next push up this way. Now when you see setup like this, it can be very good. So in other words, we've got an impulse and correction using this neckline over here. Go to the weekly time frame. Where's our TP? I don't know where our TP is just yet. That's our weekly resistance area. A monthly resistance area was all the way up here, right? Let's see. So our TP is actually outside of that first weekly resistance area. So just off of that, I won't be taking this setup, right? Because I want that TP to be actually inside the area. Now let's see what happens. That would have went straight to TP. So again, you can be picky with how you want this. Personally, I wouldn't have taken that. So again, demonstration purposes, we're going to collect that one because there is going to be some people who decide to take setups like that because again, it's a risky setup, right? But no risk, no reward. So therefore, if we did take this one, as you can see from the very point of where our fib is, do we have structure? Yes, we do. You can see several different colored candles going up and down. So let's hope we get tagged in with this candle here. There we go. So we got tagged in now. Stop loss move to break even. We're going to take 50% off the table. So right now, as it currently stands, we're at 1.4 up until the point where price decides to go straight to TP. Now we're at 2.9, right? So we're up $2,900 on one winning trade, one loss, and 2 break evens. So what I'm actually going to do now, we are in May, and I'm going to fast forward the rest up until the end, and then I'll show you guys the statistics basically. So let's go. So we're finished now, and we've gone through all possible setups. Now these are the end analytics of the same strategy that I just showed you. So right now we've got a 70% win rate. We took 10 total trades throughout the entire year just on one pair. We had 7 wins and we had 3 losses, right? Now out of those 7 wins, technically what it's done is it's accounted for the partials that we did take. So again, even though it's a break-even trade in our books as part of the strategy, it technically wasn't break-even because we've actually taken partials, right? So technically the ones that did hit full TP, I think we had about 3 break-evens and 4 wins in total. I'll be able to check in a second, but as you can see, we've got a 70% win rate. So the strategy in itself is between a 70 to 80 minimum win rate, depending on the pair and the time of year. Of course, this was 2022. And if you go and back test it, depending on the pair you have, you might end up getting between 70 to 80%. Some other years it can range between 80 to 95. It just depends on the setups that you do take as well, whether they're clean ones, whether they're full on breaker structures following the continuation, or whether they're W and M formations, or you know, inverted head and shoulders, or head and shoulders like I showed you as well. So you have different options to do these trades, right? And also you do have like other versions. So you have the intraday versions, and then you also have the weekly setups. Intraday, you're literally following the same rules, but you're doing it on a 1 hour time frame, entering on a 15-minute time frame, and you only do this within the first 4 to 6 hours of the New York session. So I'll do another video on that. It has a lower win rate, but again, it might be beneficial for you, especially when you haven't actually entered any trades, or if you're just looking for some quick bucks, it might be beneficial to you. Same as the weekly, you're looking for setups on a weekly time frame and then entering on a daily time frame. Although you might want to use the weekly setups as an indication for you to now look for a daily setup and then still entering on a 4 hour time frame. So there's different ways, but as you can see, our total P&L, we are up 8,300, basically $8,400, right? Our percentage return is literally 8.39%, and you got a 70% minimum win rate. Again, it can go up to about 95%. It just depends. You know, we won more trades than we did lose any, and that includes breaking even and taking partials, because that can build up and get rid of those losses that we did take in the first place anyways. If you can see the graph, as you can see, we started off negative, and since then it's just been a bullish trend basically, right, up until the last trade, which ended up being a loss, but we're still overall positive in every aspect possible, right? Average win rate, as you can see, we got 2 to 3.1. I think that includes the partials that we did take, so therefore that's how much we ended up taking on average, right? But the max we've ever taken is obviously a 3, as per usual. And then your ideal risk reward ratio, you know, you can do things like that. That's what it tells you. Total winners, we've got 7. Average duration, as I said, for these kind of setups, average duration on a day-to-day basis for these kind of setups, you can hold between anywhere between 30 minutes to about 3 days, 5 days, as I said. So average, as you can see, for every setup that I did take, on average it's averaged out to be about 3 days, right? And then you can see how long I did it for, so basically an entire year, as I did tell you before that. And you know, we had a max win streak of about 6 trades basically out of the entire 10, right? And then you can see things like this, performance per day. So this tells you the days that you basically had winning trades. So this can kind of filter between the days that you don't trade certain setups and certain pairs. As you can see, we had literally nothing on Tuesdays. This strategy doesn't just belong to one pair. You can do this on commodities, you can do this on Forex, obviously, you can do this on indices, you can do this on crypto, you can do this on anything. So if you've got a portfolio of about 50, 80 pairs, times this performance by however much you have, and you will see that it is a very good high win rate and high return strategy, right? And that is literally it. That is how to get funded using the EMC daily swing strategy. This strategy has allowed me to pass a phase 2 account in 15 hours. That's how you do it. That's how I do it. So don't forget to like, subscribe, comment, share. If you got any questions, put them in the comment section. I'll be sure to respond to it. Don't forget to follow me on my socials. All the links and everything is going to be in the description below. Thanks for tuning in. Peace.